more on the housing market, we want to bring in Danielle Hale. She's Realtor.com chief economist. This is pretty interesting. And Danielle, let's start with where Diana just started on all of this. Rates well above 7% and no relief from the data we got today. What does that mean?
Yeah, we had seen rates come down from near 8% in October, and that drop to almost a percentage point below their peaks had been a nice boost for buyers. In fact, on the $400,000 loan, that would have translated into a savings of $277 a month. So that was a nice boost for the housing market and helped propel some stronger numbers toward the end of the year. I think we'll still see some stronger numbers in the early months of 2024 as we see existing home sales pick up from that drop in interest rates. But as interest rates tick back up over concerns about reigniting inflation, that is going to be a headwind for the housing market. So I do think we'll see sales react, probably not in the early months, which are based on mortgage rates that were lower at the end of 2023. But it is something that both builders and realtors are going to pay attention to going forward.
How big is the deficit just in terms of how much demand there is for housing and how many houses there are available?
Yeah, so we talked about single family starts coming down. When we look at the housing market right now, it is a very undersupplied housing market. It's been 10 years in the making. And over those 10 years, we've seen a cumulative deficit between 2 and 6 million homes. Those are homes that should have been built relative to household formation that were not built. So it's a massive problem, a multi-year problem to build out of, especially when you consider that we're building about 1 to 1.5 million homes every year. It's going to take several years to build out of that problem. And there is plenty more room for construction in today's housing market.
And the biggest problem is higher interest rates at this point, not just because it makes it less profitable for the builders, but because they have their own costs that they're dealing with as well, just in terms of what it costs them to borrow the money to buy the land to build the house.
Yeah, higher interest rates do create headwinds for buyers. It creates headwinds for financing and makes it more difficult for builders to build that construction. I think it's going to be telling whether this is just a one-off increase in inflation or whether this is truly the beginning of a new trend. I think the Fed's wait and see approach is going to be the right one. But I do expect that a lot of these factors that we're seeing right now represent just temporary aberrations. We look at rental data. Realtor.com produces a rental index, and we've seen those rents, asking rents for the market, decline for several months in a row now. It hasn't yet been picked up in the shelter inflation index, but we do expect that to manifest later this year. And that's a big driver of the inflation numbers that we've seen. So I do think there's improvement in the pipeline. We just have to wait to see it.